Intel stock was down roughly 2% today. Now, in the past 5 days, Intel is down roughly 12%. And from its year-to-date high, the stock is down over 24%. Now, at one point, this seemed like the underdog story of 2025 when the stock was up nearly 35% year-to-date. Now it's only up roughly 3% year-to-date. On today's episode, I am going to take a closer look at a lot of the different headwinds Intel is facing right now, from kind of discussions of the CHIPS Act, TSMC's investment, overall market share in the CPU space for both the server and the client market. So let's get to it. But like always, if you want any semiconductor news for free, make sure to check out my free daily semiconductor newsletter, whatthechip.happened.com. So let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so like I mentioned, Intel stock right now is down roughly 2%. It does have a market cap of roughly $90 billion. Now, if we look at the past month, we see that there was a huge excitement for Intel. And one of the main reasons we kind of saw this excitement is early in February, we were getting a lot of rumors and a lot of discussions that the United States government might push for a joint venture between Intel and TSMC here in the United States. And this was obviously very hopeful for a lot of the Intel shareholders because it was going to mean that Intel had a very strong chance of succeeding in their manufacturing business. And that is what I would say was one of the main reasons the stock price kind of saw a nice price action. Now, unfortunately, maybe those rumors are now dying off as TSMC just a few days ago announced that it was going to invest about $100 billion in the new plants here in the United States. Now, I'm going to guess that there might have been some discussions of a joint venture, but it seems like TSMC preferred to go its own route instead and just increase its own investments here in the United States. So I'm going to guess this rumors of there being a TSMC and Intel joint venture is dying off. And now with TSMC's most recent announcement of their investment here in the United States, those rumors are getting less and less likely. So I want to say that is one of the things that has been kind of causing some of the stock price to drop after that overall positive reaction. The second thing is, unfortunately, recently we've heard that the current administration, Trump, wants to end the CHIPS Act. And again, this was just all discussions. There's nothing really in progress right now, but we can see that Trump calls for an end to CHIPS Act in the address to Congress last night. Now, the big benefactor here of the CHIPS Act is actually Intel, right? So Intel is a company that was receiving most recently, they mentioned about $8 billion in incentives to kind of build here in the United States, indirect funding. Then there's also a lot of indirect funding that you get from the CHIPS Act as form of tax incentives, and the list goes on and on. So obviously, a lot of players are getting hit here with the CHIPS Act, but this is mainly a big hit for the foundry players. Now, it's a bigger hit for those companies that really needed it. And if we kind of look at Intel's free cash flow historically for the past few years, it's been on the negative in the past 12 months. Since as July of 2022, for the past 3 years, free cash flow has been negative as this company has invested dramatically in manufacturing here in the United States. Now, obviously, this is all discussions and doesn't mean it's going to happen. And if it does happen, is this going to be for future funding, or is it going to include funding that has already been approved, right? There's so much here. I'm pretty sure businesses like Intel, if they do get cut in these fundings, they can kind of retaliate with some form of lawsuit. So it's not necessarily all bad news, or it's not a guarantee of bad news if the CHIPS Act ends. But it is creating more volatility and more pressure for a company like Intel, who really kind of needed that CHIPS Act funding. Now, there is another thing that I want to say kind of created some momentum for the stock, and there were reports that Intel's 18A was being tested out by Nvidia and Broadcom. Now, again, this kind of caused the stock price to go up. But if you are someone who's familiar in the semiconductor market, you are gonna know that no matter Nvidia, Broadcom, and all these chip designers, even though they do get their chips made by TSMC, they always design something with another competitor to kind of test things out. It doesn't mean they're going to use that competitor, but sometimes it helps kind of understand maybe some of the other technologies and get to test out if this is actually better. So I think this news shouldn't have been anything to drive the stock price, as it is a very typical response in the semiconductor space to do that, right? So I think obviously if we hear more of actual customer relations between NVIDIA and Broadcom, now that would be a reason to be bullish in 18A. But outside of that, I think this was just creating more hype for the stock than it really needed. So while it does right now, obviously, I'm going to talk a lot about kind of the headwinds the stock is facing. But I'm actually happy, even though I'm not an investor, that there might not be a joint venture with Intel and TSMC. I think Intel's highest growth opportunity would be a together Intel with the design and manufacturing. It's definitely a harder turnaround story, but if they do succeed in this story, it's going to be very, very bullish for investors. So I don't own Intel right now. One of my biggest reasons to even stay further away from the stock was when they got rid of their CEO, Pat. And to me, that was a huge, huge red flag of how maybe the board of directors was looking at Intel for future growth opportunities. Now, the next headwind that I actually want to take a closer look at is obviously we've talked a lot about the manufacturing push, but unfortunately, Intel is also facing some headwinds in their design process. We can see here in late January that there are reports that Intel is quietly slashing the prices of its Xeon 6 CPUs. And the main reason is to battle AMD in competition. And this is crazy, right? How the tables have turned. AMD used to kind of play in the pricing war. Now it's Intel kind of trying to sell the pricing market to be able to gain market share. And I'm going to do an episode on AMD later today, but AMD was at a Morgan Stanley Technology Media Conference on March 3rd, and they did kind of explain a few segments about the CPU market. They talk a lot about the AI, so if you want to learn about it, definitely stay tuned. I will be dropping a video either later tonight or early tomorrow morning. But here in the CPU space, Matthew mentions that AMD has gained sort of 5 to 6 points of server share last year overall. And they are very confident about server share gains to come in 2025 as they move forward. So overall, AMD believes that they're going to continue to increase their market share. So the server business, AMD believes they're going to continue to do well. Now, we also saw some remarks about their client market. And Gene, who is the CFO of AMD, mentioned that their Ryzen 9000 desktop processors have been a sellout. Like really every channel, a lot of our retail channels, you actually can see we get to 70% market share. So it seems like AMD's new CPU for both the desktop market, and they also talk about the laptop market, are gaining even more market share from Intel. So unfortunately, you're seeing a lot of headwinds for this company in one, the manufacturing side, and two, the design side and the CPU side for the client and server space. So in my opinion, all that is creating, and again, every other macro event that's happening right now in the world that's creating a lot of headwinds for a lot of these semiconductor stocks, it's all piling up for Intel. So it does seem like it's going to be a rough few quarters for Intel right now in forms of the CPU market. Obviously, with 18A coming out pretty soon, that could turn things around. So investors could definitely be hopeful of that. But it seems at least the client and server market are going to be pretty weak and pretty competitive. So let me know, what are your thoughts right now on Intel? Let me know in the comments below. If you haven't, make sure to hit the thumbs up and subscribe button, and peace out.